come in this particular piece. But the cost of the platform and the cost of technology, the cost of services, that you cannot take away. There will definitely be something associated with the incentives so that MDR can be kept zero. That we cannot take away. That will definitely be there. But the services delivered and the platform made available, there is something, we generate revenue. And yes, we provide software on a license model. We provide software on a SaaS model. We have revenue coming in from change requests to AMCs. So all that adds to the revenue source.
So, sorry to hop on this, but one final question then. If assuming that there is no outlay for digital incentives, do you see any pressure on your realization in the payment as a service piece?
I don't see demand going down for this because you can't survive without the platform. That's the requirement. However,
I'm asking per transaction realization.
Per transaction realization, there will be the per transaction revenue that we have right now, that will definitely get impacted if at all there is no outlay.
Okay. Thank you. Thank you for answering my questions.
Yeah.
Thank you. Our next question is from the line of Srinivasu from TIA. Please go ahead, sir.
Congratulations, Deepak and Ashish, for delivering yet another wonderful set of numbers.
Thanks.
So my question is about, can you give me a little light on the product that you're developing, UPI offline, that is small payments without any internet connection, and also are you working on UPI tap and pay, that is contactless payments at NPST enabled POS machines?
Sure. So offline payment is something which is a combination of software and hardware together. So it requires a very different mindset than a simple API that we deliver. So one, we just cannot give a software to generate a QR. That's, again, like I always say, we have to focus on the entire value chain and have the integrated piece. So Quench that's why we have separate approach for Evoke and separate approach for Quench. In offline payment, we have software where the QR can be generated, and at the same time the software has to be compliant as per the banking policy. There should be a complete process right from maker, checker, officer, and approval, all of that, basis which the account can be linked, the QR can be generated. But next what? What about the static QR, dynamic QR, the standee, the digital QR, print, soundbox? When it comes to soundbox, the SDK inside the soundbox. Soundbox is nothing but, it's like a mobile, it operates like a mobile phone. So then it requires a SIM card. Then this has to be connected to a certain system so that the text can be sent and it can be converted to voice, and the merchant comes to know that, payment has been done. And when that happens, the reconciliation around the mobile app, around the transactions which is delivered over the mobile app to the customer. So once that is done and the dispute is raised, then how that dispute can be solved between the merchant and the customer, and how bank is empowered to do so. So there's a whole gamut of service involved in delivering this offline payment. So that is what we have achieved so far. And interestingly, we have about 5-6 banks right now where we have this solution going in. That's why we see a great potential coming in from the terminal business in payments. So that's one. Second is your tap and pay. So tap and pay is part of our Go Live for GFF. So we have almost achieved it. We are at the closure. So that will be delivered to our customers.
Super, sir. The next question I have is, internationally, our UPI payment architecture got recognition, and there is a increasingly looking for transition from card-based payments to account-based payments using the real-time payments. So there is a demand for modernizing the central architecture. So I know NPST is working on TSP and payment. Are we also looking into this central infrastructure opportunity?
We are looking at it very strongly, but it's more than technology. It is the ecosystem that we need to solve. We need to understand. So let us understand. 2016 when UPI came in, we are in 24, and then we have a tremendously evolved ecosystem. When you go to multiple countries, each country has their own challenges. They have their own, solution which is already live. The banks have already invested into certain technology, certain platform. So how that piece will be taken care, how deep the solution will be integrated, and how well it will be adopted. So we see UPI as a great platform which has, brought in transformation. But is it the case in those countries where it is going? So that's why I'm saying it is way too immature-ish to right now, talk about the numbers, or I know you have not asked the number, but I keep getting this question. So it's way too early for us to right now, talk about how quickly international business will contribute to NPST or the industry which is delivering this kind of solution for India and abroad. What we are supposed to see is closely keep looking at the opportunity coming in from multiple countries, see what kind of technology help or technology support is required. How do we become the proponent of this particular platform in those countries? How do we establish ourselves as, thought leader in this segment so that, when you go, you talk, you deliver, people actually take that importance. So that's something that needs to be created. And I think India is in that phase right now. So once this is done, the ecosystem is well established, every country's challenges and every country's requirement is understood, then it's simply taking technology and the product and increasing the P&L. So yeah.
Okay. Thank you. And my last question is, your initial remarks, you mentioned about the new product called embedded finance, right? When you say embedded finance, is it a lending product like buy now, pay later, BNPL kind of thing, or are you saying insurance or insurtech or B2B lending?
I think I touched the topic way too early. So yeah, so it's nothing like that. So what you are referring to is various segments. Like when you say BNPL, it's a credit segment. When you're talking about some other products, these are various segments. What we are talking about is how do we embed payment into various platforms. This platform is not just mobile app, it can be various other devices. When this device has the ability to communicate over the internet, then is there a possibility to bring payment over it? The best example right now for everyone to understand is a watch. So can I just tap my watch and travel in a metro? So that's called embedded payment. So we have embedded the payment in the watch. So that's what I mean. So there are certain use cases which will keep coming.
Okay, so thanks for clarification, and that's all. Congratulations and best of luck for next week.
Thanks, Srinivasu.
Thank you.
Thank you. Ladies and gentlemen, reminder to all participants, please limit your question to 2 per participant. Should have a follow-up question, we request you to rejoin the queue. Our next question is from the line of Rujuta from ARG Securities. Please go ahead, ma'am.
Yeah. Hi. Congratulations on your numbers. I just wanted to understand what the current TAM is, and also are there any plans of going from retail-based business to wholesale?
There is a lot of discussion around B2B payments in UPI, and there has been a discussion around B2B service-driven approach in BBPS. So I believe the industry itself will take us to the wholesale segment. As and when this progresses, we will keep investing into building the stack around it. And when that happens, so because we have always believed that our capability is to build a greater technology and better platform and support this kind of solution. So for that obviously is a very easy decision for us to get into when it comes to wholesale payment. What was your other question?
What is your current addressable TAM and where do you see that growing?
If I restrict it to certain product, I think, I don't have a very specific number right now, but I can actually guide you on that. UPI growth is about 300% is what we see in coming 24 months. So that's the industry growth we expect. At the same time, when it comes to adding new use cases in the merchant payments, P2M, I believe that we can add another 100 odd. So we see that the growth can be 3x to 4x in next 3 years odd. So that's what I see right now.
Okay. Okay. That's it from my side. Thank you.
Yeah.
Thank you. Our next question is from the line of Anurag Agrawal, Analyst Investment. Please go ahead.
Amazing results, sir. I just wanted to congratulate you on that. I had a follow-up question on a previous participant's question. If there is no, incentives by the government on digital payment in this budget, if you mentioned that the realization per transaction will go down, and
yes.
I just wanted to understand what could be the quantum of that.
What would be quantum of that?
Yeah, if the incentives are not there, how much could the realization be affected?
Anurag, I will be very careful in again, breaking this up, because I know there are people who wrongly compute it. As and when the volume increases, it adds up to the revenue associated with the SaaS platform. So if we take as a whole, I wouldn't say that we have the right number right now. But if you take it as one of the component, then for only one specific component, then for sure it will have an impact. Maybe 10-15% approximately. But what is the volume that gets added to take away this impact? That is something that we need to go back and see.
Got it. Also, sir, I just wanted to understand on the fundraising side, we are raising aggressively to expand, and could you just throw some our roadmap towards expanding towards different products or internationally?
You are asking specifically to internationally or the overall roadmap?
First of all, internationally, and then overall.
See, internationally, again, I think I'm trying to explain this again and again. Whatever size, shape, or ecosystem that exists in multiple countries, it may, like if you go to GCC, you may find all the companies almost having a similar requirement. When you go to Africa, the requirement will be similar. But when you go to Southeast Asia, it will differ. So very first thing, we need to understand that we need to reshape our product. We need to reshape the way the solution is being anticipated and accepted by others. So we need to understand that piece very well. So that's where we need to invest, one. Secondly, how strong we are keeping the footprint in those countries. What kind of partner relations we have, what are the local compliances basis which the company will have to go and invest into it. So those are areas where we'll have to invest. So we'll have to invest into technology, reshaping the solution, identifying the market well, and creating a stronger footprint in these areas. So that's something I believe the organization will have to do, and that's where we need to have an investment. And at the same time, when it comes to the total roadmap beyond international, we see what we have been doing is every quarter on quarter, we are redoing the entire work of, calculating what is my resource requirement versus what is the demand. And so from 180, we have gone to 300 plus this time. And if you see 23 to 24, we have gone from 85 odd to 180. So even if we are scaling twice, we are still seeing the existing demand completely consuming the organization's, ability to deliver. Now, that's where we realized that if we have to have more diversified portfolio, if we need to have much stronger use cases in market, we need to also have an inorganic approach. And the inorganic approach can be product driven, it can be business driven, it can be account driven, it can be geography driven. So for all of that, we are raising the fund. Yeah.
Got it. Thank you so much, sir, for the detailed answer.
Sure. Thanks.
Thank you. Ladies and gentlemen, a reminder to all participants, please limit your question to 2 per participants. Should have a follow-up question, we request you to rejoin the queue. Our next question is from the line of Rahul from 36ONE Wealth. Please go ahead. Hello, Rahul, sir.
Hello. Many congratulations, Ashish, for the wonderful results. My first question is, in terms of your revenue, what percentage of the revenue is ARR and what percentage of the revenue is more transaction-driven kind of? That's my first question. Second question, considering the scalability of the business and the scalability of the people in the organization, what do you see, where do you see yourself moving from SME segments to main segment?
So, hi, Deepak here.
Sorry, just to interrupt. The third question is, do you have any ESOPs plan in your mind for the employees as such?
Yeah. Thanks, Rahul. Deepak here. So, 3 questions. I'll pick up the smaller one first. ESOP is already there. We have already declared, I think, last financial year, we have already announced it. It's already there. However, what we are trying to do further is we are trying to further reshape it and make it more democratic. So that whatever commitments we had earlier for those people who were associated with us since day one, they were brought into ESOP. So there is an incentive which was given around it. Now here onwards, as and when we are bringing leaders and when we are bringing in more people in the organization, we want to make it more rewarding. And that's why the ESOP policy needs to be redone in such a way that, without any intervention, it should be a free-flowing, reward for everyone. So to answer you short, ESOP exists. It is just that we are redoing it again for the next 3, 4, 5 years, as long as possible. So that's a part of our core policy. Can you question me on the other ones?
The second question was, what's the breakup in terms of revenue between ARR and transaction driven?
Ashish, can you take that up? Can you break it up?
Yeah. It's somewhere about 20 to 80%. 80 per transaction and 20 is other.
So 80% is ARR and 20% is transaction driven.
20 is ARR. 20 is so 80% is transaction.
80% is transaction.
Yeah.
Okay. So, just a follow-up question on that line. Do you think so the ARR revenue will bring more stability to the revenue composition?
Absolutely.
Do you have any focus in that?
Absolutely. That's the reason why. Ashish, you're saying something?
Nothing, Deepak.
Sorry, I thought someone said. Yeah. See, that's why 2 of the verticals strongly coexist in the organization. And when we are bringing leaders, we have VP for the TSP domain, and then we have VP for the platform business also. At the same time, we have started creating a very structured team around where we have a service delivery team separate, we have product team separate, and then we have a platform team separate when it comes to product and technology as well. So that's how we are focused into it. So for us, both are very important. Apart from stability, we also need to understand today my entire platform is because we were able to build the IP over the technology that we own. We do not have to pay anyone for this. Now that adds to my, margin. So whatever I invest into the processing engine we are building, that creates an IP and that reduces my dependency on anyone else. And it allows me to build the newer use cases and the platform, whatever we see is required in the industry. That's our belief.
Sure. My last question, you when any plans to move to main segments from SME?
So we are already, we have already declared we are working for the main board right now.
Okay. Oh.
I mean, there were certain criteria basis which we were to qualify. Although we were expecting last year, but then the rule came in to complete 3 years as SME. August 10th, we will be completing that. And then there was I think, paid up capital criteria and then shareholder count. So our shareholder count has increased substantially. Paid up capital, once the QIB and everything is done, that will also be done. And then we are ready to go for main board. We are already prepped up for that.
Okay. Oh. Many congratulations for wonderful results.
Thanks, Rahul.
Thank you. Our next question is from the line of CA Garvit Goyal from Invest Analyst Advisor LLP. Please go ahead.
Hello. Sir, just a clarification on, you mentioned about 3x to 4x growth in next 3 to 4 years. So are you talking about the industry or the company?
Question. Industry growth.
Industry growth is 3x to 4x, right?
That's our anticipation based on the product that we have built.
Understood, sir.
Okay.
Thank you very much, sir.
Thank you. Our next question is from the line of Yashwanti from Cogin Invest. Please go ahead. Hello, Yashwanti ma'am.
Yeah, hi, Yashwanti, you there?
No. Our next question is from the line of Aditya, an individual investor. Please go ahead.
Hi. Many congratulations on a very good set of numbers, sir.
Thanks, Aditya. Tell me.
Hi. Yes. So I just want to know what exactly are triggers for NPST in next 1 or 2 years. That's it. Because there are so many buzzwords going on. CBDC on the last call, e-rupee on the last call, and embedded finance in the GM, then BBPS. Although we have started working on BBPS and ODR, but what exactly could be the revenue contributing streams in next 1 to 2 years?
We need to understand, Aditya, that there is always a peak for a particular product or solution, and then there is always a growth, and then there is always a maturity curve. So that is standard for everything that we build. If we apply that, how we have learned in our MBA school, we believe that we cannot stop anywhere when we start building a solution. So if you ask me triggers right now, every single product that we are building and every segment that we are trying to enter, we believe it will give a trigger, and at the same time, it will allow us to diversify into new segments. As and when we move to a maturity curve for a particular product or a solution, the other product will take us to the growth stage. So that's how it will start stabilizing, or I would say fundamentally, we will start picking the organization every now and then. So BBPS we see is something that is going to be very basic. As soon as RBI announced that, credit card transactions over BBPS, imagine the volume it brings in. We did not anticipate this trigger to come in BBPS, but being there, building that product, it allows us to be there whenever such opportunity comes in. Credit line, I think there was a discussion around, what kind of MDR can be brought into credit line. And the moment we start building it up, as soon as there is an interoperability in this, for sure it creates a great opportunity for the merchants and the aggregators with whom we are working right now. It's important to stay there. So I see that trigger is present across all the products and solutions that we are working. There is a possibility that certain products we may work on may not give us an ROI or may not give us a return. That's why we want to split our, investments into multiple areas. Where it does not work, we need to have something else to do so. So for right now, I think in fact, this segment is so disruptive that every quarter on quarter you need to relook at what triggers will come into your business. Yeah.
Correct. Yes. So that is the main thing which is creating confusion more in my head. So I'll reframe my question. What I'm trying to ask is, which of the APIs are the first one to get commercialized? Matlab, the APIs which are ready by NPST and are floated in market and revenue can come any time in next 1 quarter, 2 quarter, 1 year or 1.5 year, 2 years, whatever.
There are 3 focus areas. One is how do we attract the subscription-based business? So autopay is that. That's the trigger. Second is
API for autopay is ready, sir?
It's tested already. We are looking more on the operationalizing it. It is part of our GFF launch. Okay? But again,
autopay, yes.
So when it comes to technology, I will always say it's there. And last quarterly call, I rectified. I said that, we did a mistake of declaring the date way too early because we realized that tech can be taken care, but when it comes to ops and compliances, we now need to give more time to that rather than just tech. So I believe that the operational piece will be taken care in next, by August end, and probably Q3 we are seeing the numbers. It's already tested, it's done. Second is our payout API, and third is our third-party verification API over API. So these are the products, yeah.
Payout API and third-party verification.
Yeah.
So what exactly we are doing in third-party verification?
It allows you to validate before making a payment that this is the right customer.
Okay. And one area of commercialization could be the State Bank of Mauritius partnership also, right?
That's more from the diversification perspective and strengthening the engine further. Yes, that's one.
Okay. So 3 focus area and 1 State Bank of Mauritius. Okay, sir. That's it from my side. Congratulations on a very good set of numbers, sir.
Thanks,
Amazing.
Thanks.
Thank you. Ladies and gentlemen, that was the last question for the day. I now end the conference over to Jaimin for closing comments.
Thank you everyone for joining the conference call of NPST Ltd. If you have any query, you can write us at info@kirinadvisors.com. And once more, thank you to the management team and participants for joining the conference call. Thank you.
Thank you.
Thanks.
On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Yep. Bye.